Support for CFO Thought Leader comes from Brex and Anrock, one tax engine for your global sales.
Hello, this is Zach Johnson, CFO of Cribble, and you are listening to the CFO Thought Leader podcast.
This is episode 1070.
So one of the emerging trends in the industry is, more and more software companies are billing their products on a consumption basis. So Snowflake was the real pioneer in this area. Snowflake was a Tableau partner for many years, just an unbelievable product. I was a huge advocate. But one of the experiences of that is, you start out and your first kind of few invoices, it's around $50,000. And then, 2 or 3 years later, you find that you're spending $2 or $3 million a year on Snowflake because the amount of data across the organization that is being analyzed using Tableau on top of Snowflake. It was very hard for us to understand what data is being analyzed, how frequently is that being queried, are there any inefficient queries? So what queries are costing us the most?
Hi, it's Jack. On today's show, we speak to Damon Fletcher, CEO of Caliper. Like many CFOs, Damon Fletcher sees Snowflake as a transformative force in cloud-based data management. Having once championed its adoption at Tableau, he recognized its ability to scale analytics, but also the hidden costs CFOs face as usage grows. Making those costs more visible led Fletcher beyond the CFO office. Now, an entrepreneur and CEO, he's tackling cloud cost optimization head on. Damon Fletcher shares his story right after this. Have you heard about Brex? It's the world's smartest corporate card. Finance leaders love it because it's got powerful controls and rewards that help them make every dollar count. Here's why Brex cards are so smart. You can embed your expense policy inside the card. This lets you control employee spending before it even happens. Brex cards also automate manual expense, tasks like receipts, memos, and reviews. So you're free to focus on optimizing your company finances. Over 25,000 companies take every dollar further with Brex. Join them at brex.com/grow. Hello, we're speaking with Damon Fletcher, a finance leader turned entrepreneur who's over the last 2 years navigated the CFO to CEO journey with some agility. As the former CFO of Tableau, Damon played a pivotal role in scaling that high-growth firm and was occupying the office, I believe, you can correct me otherwise, when Salesforce advanced with its $15.7 billion all-stock deal to buy the company. Now, as CEO of Caliper, and again, I'll say CEO, he's leveraging AI to advance cloud cost optimization. We're pleased to have him with us. Damon, welcome back, I should say, to CFO Thought Leader.
Yeah, I'm excited to be back, and it's been a few hundred shows ago, but it's excited to be back. Thank you.
I know, and thank you. I want to make clear, we don't ordinarily interview CEOs, but Damon, he's part of the family here from episode 400. I forget it, maybe it was 450. But anyway, he's part of the family here, so we always welcome back our family members. What was this whole CFO to CEO journey? You have to indulge us here. I believe many CFOs think about this, think about what ifs, maybe I'll step in, but they don't take the journey that you have over the last 2 years, really. Was there a moment, as you look back, was there a defining moment when you realized you were ready for this transition from CFO to CEO?
I don't think you're ever necessarily ready. I think kind of what, I had a ton of experiences that I, kind of shaped my career with starting at Price Waterhouse, later become the CFO of Tableau, and obviously having a very successful exit with the Salesforce acquisition. Went to another company called DataRobot to try to prepare them to be going public. When the market collapsed, I looked at kind of what was going on in the industry and, how many layoffs were happening, at the beginning of 2023. And I said, well, I've got a lot of ability to kind of help, a number of people who have been impacted by the kind of the downsizings of some of the larger corporations and create some value for shareholders. And it was, exciting opportunity to kind of go out and work on what I thought was one of the emerging kind of major big business issues for the office of CFO, which is cloud spend, and take advantage of that kind of moment where, companies are trying to be more efficient and using the skills that we learned at Tableau to kind of build a product that really helped companies drive efficiency in a market where people are cutting back.
All right. I'm gonna once more, we love you to have you reflect a little bit on your career. And I'm gonna reveal something to you. I mean, you have a very traditional finance resume. It's not like some of the other CFOs who jump into the CEO role. They came out of Wall Street or what have you. We've done this path many times with so many finance leaders, Price Waterhouse, senior manager, auditor. And then you jump in and your titles, I'm just going to share some of them. And these are at Tableau, where you spent 7.5 years. But you really built your career there, which is just a really interesting company for having done that. So many finance people are familiar with Tableau. But director of technical accounting, vice president, technical accounting. These are not the particular, right? These are not what we find on many CEOs' resume. You become a vice president of finance. You become a senior vice president of finance. And of course, you step in to the CFO office, where you were, there for more than 3 years in that office. Now there's this last mile that you have taken and advanced from CFO to CEO role, and you didn't see a moat where I think many finance people do.
No, I mean, I think, my experience at Tableau, I think probably about the time that I became the senior VP of finance, really, at Tableau, the finance organization really had its hands in a lot of the other areas of the business, managing all the back office IT for the company, whether it be marketing or dev or the public cloud for the customers. That was all being managed by the IT organization. You also had, you touch sales through the deal desk function, and was very involved in working with our sales leaders and, really trying to aggressively move our business from perpetual to subscription. And so there's a lot of areas where really helped kind of drive the business forward, and learned a lot of, about how to operate the business. And I know when I joined DataRobot, some of the executives there were very surprised that, they're, a non-traditional CFO that they'd had, maybe before, where, they were really focused on just that one area of the business, where I was helping, different aspects of the business and jumping in and leaning into marketing or dev or things like that. And that was something that was not necessarily where their experience of working with a CFO, but that was kind of always the experience of, how the CFO at Tableau operated more as a kind of a COO. And so I think that broader exposure of having, worked in different disciplines really prepared you for being able to, be the kind of the CEO of at least a company this size. I find my days, they're, a lot of it's been in marketing, some of it's been in sales, some of it's IT help desk, customer success. And so the reality is, when you're working at a small startup, you have to be nimble and be able to kind of problem solve across multiple different disciplines. And I think that experience at Tableau really helped me with that.
Did you raise money at Tableau, or I forget when you arrived there, but had you raised money at Tableau, and what about DataRobot?
Yeah. So when I was at Tableau, we did, my first few weeks, we did a secondary after the IPO. And so that was a very successful secondary. Then at DataRobot, and obviously throughout the years at Tableau, I started taking over investor relations after the kind of the 50% stock drop in Tableau. I think that next quarter I was running the investor relations team. And so, very involved in meeting with investors and going on the road and kind of building up a portfolio of long hold investors that stayed with us from 2016 through the sale to Salesforce. And then at DataRobot, my first week on the role, I was brought in by a group of investors who were, raising money. The company was raising $300 million. The investors kind of recruited me, and so I joined while that process was underway. I would say so. I didn't necessarily participate in raising that capital, but it, the final stages of execution of that over the 2 or 3 first weeks of being there, and then we were looking at taking the company public. So we were doing a lot of meetings with, crossover investors who would be participating. Many of those were some of the investors who had stayed with Tableau for many years. And so we were really excited about taking the company public. And then obviously the markets didn't participate, didn't work with us with the sharply rising interest rates at the end of 22 and the beginning of 23. And that kind of stalled out many late stage private companies from going public.
And I have to say, because you tell me that was kind of a bumpy chapter. You leave, and the Caliper opportunity comes forward. Now, can you?
No, but I think when I left DataRobot, so the company, we were growing rapidly when I joined, well north of 40% growth, and the company was anticipating going public, hiring very aggressively. When I joined, I think we doubled in size in my first 90 days, something like that. And then we obviously the market started kind of behaving erratically, and then we had to lay off half the workforce over kind of a multi-stage layoff. And then many of the executives, we offered the ability for them to kind of opt out, just given the company was unlikely to go public in the near term. I chose to resign. I'd hired 2 really great executives under me, and they were kind of the co-CFOs, and one of them is now the CFO of iSpot. One of them recently left DataRobot to go to be a CFO of another company. So they were very successful and great talent, and so. I felt like they could manage it. I intended to retire. I did about 6 months of that, and then saw some of the layoffs happening at Salesforce, and I said, "Wow, this many of my colleagues are being impacted, and what if I started a company that really was in this analytics space and kind of solved the kind of a core business problem for CFOs, and went out and recruited 5 or 6 people who had been impacted by layoffs, and kind of built a product from scratch in 6 months and began marketing it at the end of that year."
Wow. Okay. So there's something that we don't see often done. It wasn't like you decided to reach out to your recruiter and take him out to dinner and see what's my next CFO role. You put together a business plan. Was there a co-founder, Damon? Forgive me for not knowing the formation of the company, but were you were the founder?
Yeah, so I recruited a gentleman named Michael Arvold. He was one of our top engineers at Tableau, running the long-term innovation team, working directly for our CTO. And so I recruited him about January of 2023. We officially incorporated in April. And so he kind of led the 2-person product team under him that built the kind of first the first prototype of the product that we released at the end of that year. And then, I handled, sales and marketing and, the back office stuff. And he handled the kind of the technical areas of the product. And so, that was kind of the division of labor, if you'd say it. And he, really, really talented individual that, had a lot of experience kind of, building kind of new and emerging technologies from scratch, giving his kind of role at Tableau.
Now, up front, we mentioned how this is about cloud cost management and expense management for cloud services. There's something more to this, though. Help us understand what sets Caliper's offerings apart, and why this opportunity got you excited.
Yeah, so many of the legacy, the tools that have been around for a number of years, like Cloudability and Cloud Health, really started with, maybe just helping companies with the public cloud. They were very oriented towards, dashboarding and reporting and maybe reserved instance modeling, things like that. And so what we tried to do is do something very different, really helping be more of an analytics product. So allowing kind of deep discovery of your cost and usage, and doing that not only for the public cloud, but what I saw is some emerging risks that, there's nothing out there to help you manage the tools like Snowflake and Datadog and Databricks. So really expanding the use case beyond just the pure public cloud, and giving kind of the data at the fingertips of all the engineers, and we're doing it in a very disruptive way. So we're charging a very small per seat cost. That's when we look at some of our competitors, they might be charging their customers $200,000, and we're coming in at $20,000, $25,000 engagement, which is a dramatic cost savings on the actual tooling. But then they get what I perceive as a better experience for how they manage their cloud.
Today, most every tech company, it seems, would have us believe that AI is really what sets its offerings apart. But I was hoping you could get more specific for us. And really, what are the types of technologies that Caliper is investing in, AI technologies, that gives it an AI advantage? Get more specific for us.
Yeah, so there's a couple of ways that AI is impacting our business. One is, within the public cloud, more and more companies are choosing to use more expensive machines. They're using services within the public cloud or these other consumption-based products. And so you're seeing an increased amount of usage and costs associated with those AI projects. And so we're helping, that's a kind of a tailwind for our business, because that creates, ever increasing cost for that company, and they're looking for better ways to manage that. And so that's kind of the hook of how we get engaged with those companies, and how we help. And so we build a number of features that allow you to better explore that cost and usage data of using other AI technologies. So that's one way. And then the other way is we're actually investing in AI ourselves, and how to help companies not only visualize their cost and usage data, but also be able to predict what's going to happen at a very granular level. And so we've invested in a kind of a technology called MSTL, which is a multi-seasonal kind of forecasting technology that's machine learning / data science oriented. It is able to kind of look at patterns of data in a way that's very sophisticated based off, cloud data is like, oh, well, sometimes you're billed by the month, sometimes you're billed by the week, sometimes you're billed by the hour, whatever's happening. And so this kind of model that we're working with can help companies better predict those costs and then surface anomalies. We then can surface those anomalies, and then what we're using is kind of a generative AI model that then takes those anomalies and then makes recommendations in kind of plain English. The generative AI model, we're not asking it to do any math. We're just using it to summarize the queries and the results and kind of action points. And so, we built some prototypes of this, and we're preparing it for releasing it to customers. And so I think it's going to be the next wave of disruption in the industry, and we're really excited about it.
We get a sense that an important part of the offering is the visualization capability. What is that visualization? What distinguishes that? What are people looking at exactly?
Yeah, so our current product, we started with an analytics product that allows you to kind of dig into your data, and it generates automatic visualizations based off the data that you're looking at. That'd be a heat map or kind of a line chart or whatever we think is the right visualization to look at that particular trend. The AI feature that we've built will then take that data and then not only look at the past and visualize the past, but then predict the future. And so you'll have a visualization of what we think on a granular level, what the forecast will be. and then surface anomalies as part of that visualization, and then summarize in an email. As the prototype is just an email, it summarizes kind of, here are the anomalies that you should look at, and then here are the action points that you should take as a steward of that cloud. And so it's kind of a combination of visualization with generative AI is kind of what we think is the right answer from a development standpoint.
Who within a client company would be find that visualization powerful? Who is it that is looking at that information?
Yeah, so the companies that are, I think, achieving the best results have a partnership between their CFO's office, so maybe it's the FP&A person who manages the dev spend, and the office of CTO. So sometimes that's a DevOps function, or sometimes it's if they have a FinOps function within their organization, which is a kind of a blend between a DevOps person and a finance person. It's a new role that's been emerging in the industry for the last few years, and so. It's generally the best companies have a partnership, and they'll have licenses for those different groups. I think in many times, I think sometimes the finance team will says, well, this is not my budget, and I'm going to, the dev team needs to handle this and keep it under control. But I think the challenge with that, hands-off approach is that the dev team has so many competing priorities. They're trying to deliver new features to their customers. They're trying to have better security. They're trying to deliver more scalable, more efficient, engineering efforts. And so, unless you make it kind of a KPI or a key part of their own individual goals, kind of to manage the cloud spend, I think it just sometimes is going to put on the back burner. But if you have an effective partnership between finance and that team, where they're continuously reviewing the results, looking at it maybe every day, like some of our clients are, that's when they're seeing 20-30% reductions in their cloud, and that can be very material numbers for some companies. If you're spending $10 million and you save 30%, that's 10 or so heads that you can invest back in your business.
Now, Damon, we know Caliper is a startup. It's a new company, but give us a better sense of where you are sort of on the startup trajectory. Where are you?
Yeah, so we started selling at the end of 23. We've got about 20 customers. Those range, we're allowing multi different stages of companies. We're not necessarily focused on we're only going to go after the enterprise, or we're only going to go after mid market. So we have early stage startups spending $100,000 a year on AWS, all the way up through public companies. We have a couple public companies that we're working with that are using us to manage their cloud and their Snowflake instances. And so, kind of, it's a range of companies. I think the sweet spot probably for us because I think there's more mature companies sometimes have teams and technology that are already in place to help this problem. But a lot of times that technology company, maybe $150 million in revenue, spending $10 million on the cloud, and haven't yet really tried to approach it from an efficiency standpoint. That seems to be the most exciting companies that we work with that are able to see the biggest results, because this is like the first time they've ever had a tool to help them manage their cloud spend. And if they haven't, that's, we can give them some great ideas, and generally our partners have helped them, find some pretty significant savings.
You had a Series A, is that right?
Yeah, so we've only raised seed money at this point. We have not, having a priced round, and so we raised just, we're trying to be capital efficient. I'm a former CFO, so we're running our business as lean as we possibly can, and so we've raised about $1 million, and at this point, and then we eventually will raise a seed, kind of a Series A round, once we get to kind of the revenue targets that we feel like can achieve that level of funding.
When I asked you who within the organization is going to find this powerful, I'm thinking, Damon has a lot of insight into this. I mean, as a finance person at Tableau, that whole go-to-market strategy, what assumptions did you make about the people you'd be selling to? Has it played out so far the way you believed it to, in terms of who you're targeting, how quickly they'll see the value,
Yeah, I would say sales is a lot harder than finance. I've learned, and so I think honestly, every company that's out there that's in the technology industry could use our product. I'm like I would say even if you have another cost optimization tool like one of the legacy tools like Cloud Health or Cloudability, you would see value from using our product, and the cost of that is so negligible compared to the cost of your other tooling that it's kind of a no-brainer. I would have thought, maybe I'm naive, just being a first-time founder. I would have thought we'd have hundreds of customers at this point, but I think there's a number of challenges that companies face. There's lack of funding themselves. There's competing priorities. Those type of kind of things that you have to work through as part of a kind of a sales motion. So helping them build consensus in their organization to move forward. I think the target audience, I think, is the same as we perceived. It's kind of a heavy FP&A user that's interested in this particular topic, like maybe owns a dev budget, the dev organization, maybe the CDO's office for our Snowflake version of the product. And so I think that is the same. When I see companies that are successful, about half the companies that do the trial that actually turn the product on with their data have purchased. And we've actually just received kind of an early renewal for April, and now our renewal rate is 98% for their first, through April, probably of our first 7-8 customers, and so from the year prior. So I think companies are really loving the product. We have 4 companies that have already expanded, so they bought a number of seats, and then they already grew with us. And so, in many ways, it's very successful. From a making customers successful, I think the biggest challenge we face, like many other startups, is customer acquisition is very hard when you're a new brand and trying to raise visibility for your company and awareness. Honestly, is sometimes a challenge, and so we're doing a lot of things to kind of raise that awareness and hopefully get more and more companies to try the product.
You mentioned Snowflake, and I imagine there's a lot of key partners that Caliper is building relationships with, but can you give us a better sense of the landscape and the sort of the ecosystem that Caliper is now part of?
Absolutely. So there's a number of technologies that we help companies analyze their cost and usage. So one of the emerging trends in the industry is more and more software companies are billing their products on a consumption basis. So Snowflake was the real pioneer in this area. Snowflake was a Tableau partner for many years, just an unbelievable product. I was a huge advocate of moving our own data from SQL Server on kind of serve, on-premises servers to moving it to the Snowflake cloud when I was at Tableau. But one of the experiences of that is you start out and your first kind of few invoices, it's around $50,000, and then 2 or 3 years later, you find that you're spending $2 or $3 million a year on Snowflake because the amount of data across the organization that is being analyzed using Tableau on top of Snowflake. And so what I experienced at least was, it was very hard for us to understand what data is being analyzed, how frequently is that being queried, are there any inefficient queries? So what queries are costing us the most? And that's very hard to do with the Snowflake native billing console, at least, particularly when I was at Tableau, and I think they've made a number of enhancements and announced that in the last 6 months. But if you go back in time, there really was no ability, at least when we started Caliper, for companies to understand which Snowflake queries were costing them the most. And so what we did is we have the ability to analyze your Snowflake spend, maybe do a scatter plot of which queries are taking the longest to run or which ones are most inefficient. And then the customer can make an informed business decision on, well, I'm spending this amount of money on these 10 queries. I'm spending more than half my entire Snowflake spend on these 10 queries. And maybe 7 of those 10 are like core things that the business needs to be successful. But there's 2 or 3 maybe that wow, I didn't realize this person was spending this much money to analyze this particular data set, and that's not very valuable to my organization. And then they can make an informed business decision to say, wow, we're going to scale that back from running that query once an hour, or downloading that data, or whatever they're trying to lower the spend, and we're going to do that on a weekly basis, or we're going to batch it, or whatever it is. And so that's the type of insight that we can deliver to companies that never had that before. And like, you're seeing a lot of pressure on Snowflake's earnings the last couple of years because there's been this sharp acceleration in the amount of companies using it and the amount of data flowing through it, but there wasn't necessarily tooling to help them kind of bring those costs down or get them better under control. And that's what we're trying to help companies with.
Damon, we're still gonna ask you for what we refer to as a finance strategic moment. Actually, but as the price of admission here, love to know, take us back in time. And you mentioned that significant drop Tableau experienced. I think you were in the investor relations realm at the time. And would love to have you go back in time for us and detail all of what Tableau encountered. And then, of course, the other intriguing chapter is, clearly the sale to Salesforce. Anything you'd like to share on that chapter? Those are just two really historic chapters that I would imagine many listeners would be interested to hear your perspective on.
Yeah, so there obviously a number of stories that are from that tenure, but I think maybe I'll talk first about the first one you mentioned, which is the collapse of the Tableau kind of value. So if you go back to 2014, 2013, when Tableau had its IPO, we were competing against some legacy tools, business objects, and things like that, MicroStrategy, Click, and we were obviously the leader and an emerging technology growing very rapidly. I think it's putting up 70% growth year over year in our first few quarters as a public company, hiring aggressively to try to capture market value. In 2016, Microsoft released Power BI, which a number of investors perceived as kind of almost like a copycat version of Tableau, and it was being bundled with the Microsoft products, and there was a lot of fear about could that impact our earnings. And I remember in 2016, we weren't necessarily seeing it being a big impact on our underlying business from how we were performing and how deals were flowing through our pipeline. But I remember there was I can't remember the exact details, but somehow we lowered our or didn't raise our guidance as much as the market expected. And because we were such a high flyer, LinkedIn and us on the same day had a dramatic decrease in valuation. So I think Tableau was down about 50%. And I think that really created a lot of introspection at the company. I think Christian, our CEO at the time, came up with like 8 or 9 key priorities for the company to get us back on track. And there was a couple of those that I personally helped with, which is one was moving our customers from perpetual to subscription, because we felt like that would be a more a better business model long term for predictability of earnings. And when you have a company that if you're buying up front and you own the product, it's very different than if you pay every year, even though it's a smaller fee, because it's more predictable. And so we started that process after that quarter of moving our business to subscription. I took over investor relations, and so kind of rebuilding investor trust was one of those. And so we spent a lot of time on the road that summer, and really tried to educate a new group of investors who were more long-term oriented holders to kind of buy into the stock. And we hired a head of investor relations, Derek Wong, who helped with that and did an unbelievable job for us, kind of targeting long-term investors. And then the third thing was we moved. We had planned to hire like 1,000 people that year. We scaled back the hiring plan and then dramatically changed our real estate footprint. And so I was responsible for kind of handling that transitioned where we subleased a lot of our properties to Google and really moved all our employees into kind of two beautiful new buildings and became a lot more efficient from a real estate perspective. So that was like a multifaceted way of really addressing kind of a market decline. And then if you follow the company from 16 through the sale to Salesforce, it was really up and to the right. There wasn't a lot of volatility in the stock after that point, as there had been in the previous period. So I'm really proud of what the team accomplished. And I think that was kind of a huge undertaking to kind of, because that was a pretty scary moment for the rank and file employee who saw, half their long-term savings decline based off the share price. Your second point was like, hey, was there anything interesting from the Salesforce? And I don't want to get too much into detail of the how the acquisition worked, because it's all publicly available in the filings related to the acquisition. But I think the biggest thing that was we saw clear cultural alignment between Salesforce and Tableau. We saw a lot of synergy from a product perspective, and so and then obviously they paid a huge market premium to what we were trading at. I think the negotiation did take a long time. It was 6 or 7 months. I think they had a floor that they would go to, and we had kind of a minimum that we would go to. And so I think there was at one moment where we had a really spectacular kind of addition quarter with our net dollar retention kind of increasing to a level that are staying at such a high level that we shared with the market. And obviously our stock did really well, and that got us into the range, and the deal got consummated. So I think if you continue to focus on your business when you're in the middle of an acquisition and you put up good numbers, if you and the acquirer are a little off on where you both can go, I think just focus. The biggest piece of advice I get is don't lose track of the ball. Like, the most important thing is your business, because the acquisitions may not happen. And luckily we performed really well from a business perspective, and that got us into the range of where Salesforce could complete the acquisition.
Today, companies are global from day one. And as your business grows, so does your global tax liability. Enrock is the only enterprise solution built for modern business models, like SaaS, that automates sales tax compliance worldwide. For most companies, sales tax compliance is actually high risk. SaaS businesses that take a reactive approach lose on average 4.3% of revenue to unpaid tax, penalties, and interest. So while other tax solutions are stuck in the retail era, Enrock enables proactive compliance. Get full control of your tax obligations and enter new markets faster, even as new tax regulations and requirements emerge. Reduce your time spent on tax compliance to minutes per week with automated exposure tracking, tax calculations, and filing. Trusted by industry leaders like Notion and Anthropic, Enrock also integrates seamlessly with your existing tools, ensuring accurate tax monitoring 24/7. Don't let complex tax regulations slow your growth. Visit enrock.com/thoughtleader today to see how we can simplify your global tax compliance. Well, Damon, we appreciate the extra detail there, and agreeing to return to one of the bumpier chapters for Tableau. But great insight comes from times like that. Wondering what the next milestones are for Caliper. What would those be?
Yeah, sure. I think the big next milestone for us is the number one thing I do every single day, we focus on our customers. So like, what are they needing from a feature perspective? And then, what are we going to build? So right now we're building a new feature that, we have ability for them to create bookmarks and save visualizations for others to use. And one of our customers said, "Hey, well, we're saving a lot of those for one-time use, and then sharing them with people, and then it's cluttering up where we have hundreds of those kind of saved, and said, is there a way to make those temporary? And so my team jumped on it, and we're brainstorming a way to, be able to knock that out quickly for the customer so that they can, send a temporary saved bookmark for that expires after 30 days and then it goes away. And so it's problems like that of like solving real customer pain point that I think will make our customers successful and enjoy using the product. And so we have to do a number of those things, and those are kind of table stakes. Then we also have to kind of think about the next version of the product, which we talked about the AI version. We got to get that into the market, and then that requires significant capital, right? Because when you have AI features, they cost more, and so I think we eventually will raise capital when it's the right moment. I think the biggest thing that we don't want to do as leaders is raise capital at a moment where our business is not strong enough from a foundation of revenue and things like that it's dilutive capital. And so we're really trying to get to that $500,000 or $1 million in revenue mark that kind of supports having a kind of a Series A. And so a lot of effort by me and the team on helping find new customers and kind of expanding our kind of the group of customers that we have, I think is probably the most important thing in the next 12 months. When I think about and look forward, I think the biggest opportunity for us is really to help with a number of use cases in the office of CFO. This cloud optimization is one idea we have, but I think over the long run, we're going to have hundreds of different apps helping the office of CFO with different business problems. And that's what gets me excited and makes me enjoy coming to the office, is kind of thinking through that long-term strategy. And it takes a lot of will take a lot of capital and take a lot of hard work over the next 5 to 10 years. But that's where we're focused.
Damon Fletcher, speaking like a CEO on CFO Thought Leader. Thank you for joining us.
Thank you for having us.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.